All right, great. And so in this video, I want to briefly explain a strategy, an options trading strategy that I use quite often to make, 100+ dollars per day trading options. So here is the current position that I have on. So when the market opened this morning at 9:30 a.m., I got into this call credit spread. This call credit spread, as you can see here. Let me change my colors on my pointer here. So I put on this call credit spread, roughly 20 minutes after the market opened this morning, and I took in a credit of $140. Right. So currently at 12:44 p.m., I'm currently sitting at a profit of 77%, which is roughly $108 that I have actually profited, actually 120 now that I have made on this particular call credit spread. So now a call credit spread essentially is a bearish trading strategy. It's a bearish options trading strategy. So what do I mean by bearish? Meaning that the position makes money as the price of the underlying declines in value, right? Hence the term bearish. So the trade that I have on as a call credit spread on the S&P 500, which is represented by this ticker symbol here, SPX, right? So as you can see here, my position is my call credit spread is way out of the money, meaning that the price of the underlying is far away from my credit spread. Right, so this circle here on this particular platform represents the current price of the underlying, and we can see the actual value here is 38.45 and some change. So I make money on this bearish options trading strategy, which is called credit spread, as long as the price of the underlying stays below my short strike of 39.20. So now the reason why I got into this trade this morning is because when the market opened, it immediately opened down. In other words, it opened down in value from where it closed during the previous session yesterday, right? And so the market opened down, and also every sector that makes up the S&P 500 was in the red. And as you can see here, those sectors are still in the red. And so what are those sectors? Just an FYI. So you have the information technology sector, which is represented by XLK. And this sector particularly um, is important because when it's in the red, because it has the largest impact on how the S&P 500 moves, it's pretty significant, right? And so it has roughly a 27% impact. So it has the largest impact on the value of the S&P 500. And so these different sectors, the healthcare sector, the financial sector, the consumer discretionary sector, the communication sector, industrials, consumer staples, energy, utilities, materials, and real estate. These are listed in the order of their impact on the price movement of the S&P 500. So as you can see here, the real estate sector has the least impact on how the S&P 500 moves, right? And so the fact that when the market opened this morning, every sector was in the red, in addition to the fact that the New York Stock Exchange advancing declining indicator was negative, and not only was it negative, but it was negative 2,000. As you can see here, is actually below negative 2,000. And so what that represents is that means that there are more stocks that are trading on the New York Stock Exchange that are going down in value versus advancing in value, right? So it's advancing stocks minus declining stocks. And so anytime you see a negative sign, anytime this value is negative, and that means that there are more stocks declining versus advancing. And so those two things, in addition to the market opening up down this morning, just let me know that I need to put on a bearish trading strategy, a strategy that will take advantage of the price of, in this case, the underlying is the SPX decreasing in value. So basically, as they say, the trend is your friend. Just follow the trend. And so what I'm going to look to do is, so because right now it's roughly 12:48, almost 1 o'clock. We'll have 3 hours left to go before the market closes. I'm going to continue to watch the price of the underlying, which is represented by this circle here, because I'm going to look to take in additional credit, right? So I'm going to look to put on, in addition to my call credit spread that I have here, I'm going to look to put on, and it's a call because it's on the call side, right? So you got, so in the options world, you got call options and you got put options, right? You don't have those two. And so you have calls on the left side of the strike prices, and you have puts that's on the right. And so I'm going to look to actually take in additional credit to add to this $140 that I received for selling the call credit spread. And so probably going to put this additional credit spread on roughly around 2 o'clock. So I'm probably going to sell maybe the 38.10 and buy the 38.5. So considering that I sold 4 contracts here, so as you can see here, 4 call credit spreads, right? 4 contracts for this call credit spread. I'm going to sell the same number of contracts there. And right now, if I wanted to put on this position, which I'm not, because I want to give the market some time to really, you know, convey whether or not it's going to continue to drop more in value. So right now it's at 38.48. Because if it continues to drop in value, then I don't want to be here, right? Because if it ends up at let's say 38.20 around 2 o'clock, then I don't want to sell the 38.10 and buy the 38.05, because that's going to be too close to the price of the underlying. So the idea is to get far away from the price of the underlying while still taking in a decent amount of credit, because you don't want the price of the underlying to drop below your strikes on the put side, or you don't want it to go above your strikes on the call side. So I'm going to come back and update you guys around 2 o'clock um, to let you guys know whether or not I made a decision to put on this additional credit spread. All right, so we're back. I want to give you guys not really an update, but it's actually less than 10 minutes before the market closes. Originally, I had said that I would come back around 2 o'clock to give you guys an update, but nevertheless, I got busy. I didn't have a chance to come right back at 2 o'clock. But so, as you can see here, the position is well out of the money. In other words, the price of the underlying SPX is the underlying is way, uh, it's far away from my credit spread, my call credit spread. And so if we take a look at the position itself, as you can see here, I made the entire $140 that I took in for selling this credit spread. I thought about actually putting on a put credit spread early on, but then I decided not to, because I got a little bit busy, and so I got sidetracked. But nevertheless, I do have 2 other trades on in my Thinkorswim account. As you can see here, those are working as well. So right now I'm looking at a credit of $225, or a profit of $225. So that'll be added to, or essentially what I've made for today. When you combine, this 140 So that'd be, a little over $300 some dollars. But nevertheless, yeah, so we got 5 minutes left before the market is closed. And I'm just going to let the position, I'm not going to close it out, of course, because it's so far away from my credit spread that, there's no way that the price of SPX is going to move, beyond my call credit spread of 39.20 and 39.25. So just going to let the clock run out here and call it a week. All right, so less than 10 seconds before the market closes. So I'll be walking away with and the market is closed. So I'll be walking away. So I'm walking away with the $140 that I made for selling the call credit spread early on. Now, this, you're probably wondering, you know, this is a pretty hefty loss here. Well, this is a really long-term trade, and so this doesn't expire until next year, and so I have a lot of time in this trade for it to correct itself and for me to make money. So don't get distracted by that. So 140 there, and then in my other account, I made, as you can see here, 265. Right? So 140, 265. So that's what, $405 that I made in one day. So not pretty bad. Let me just make sure that my math is correct. 265 plus 140. Yep, 405. So there you have it. I mean, so call credit spreads are a good options trading strategy that, once you learn how to trade options, that you can use to make, hundreds of dollars per day, relatively easily in a short period of time. So hope you learned something from that video. Hope you enjoyed it. If so, definitely like it and subscribe to the channel. Thanks.